There's an interesting thing here today that came out of the Fed. The clear thing is that they are now data dependent. The data is now negative, and I think you and I can now depend on the fact that there will not be 4 rate increases as we move through the year. There's 3 things right now that the market's focused on. One was Fed policy, which dominated.
So that's your base case?
Correct.
There won't be any further rate hikes this year by the Fed?
No, I think at a minimum we'd be open to the fact that they could increase rates twice going into this year.
Will they go in March?
I don't think so. Based on the way the data is trading right now, I think they need to see the data as it progresses.
What does this mean for markets then? Because we're looking for a positive catalyst to get us out of this funk.
Well, you know, it's interesting. The U.S. markets today actually, I don't think, fully processed what happened today. The Federal Reserve actually presented an accommodative stance, which is important. The second thing now, I think what we're going to see from China is probably some more accommodation as it relates to their currency. And the third thing I think people are neglecting is that oil right now at these prices, what we're waiting for is for demand to step up in oil.
Exactly.
So again, what we're looking at is a somewhat stimulative environment. And the last leg of that 3-leg stool is what is policy going to be relative to Chinese currencies.
What continues to confound me, Frank, is you're quite right. There should be a demand response from oil prices at 12-year lows. That's a huge stimulus for the consumer, huge stimulus for corporate balance sheets as well. We haven't seen it. Oil prices have been depressed throughout the course of 2015. Where's the demand response? I know there's a lag time, so does it imply it comes in the second half of this year?
Well, you know, we're going through, I think right now, years from now, academics will look back on in terms of an economy in transition. China is transitioning from a manufacturing economy. And you look at their industrial production numbers that we saw recently, which were lower. They're now transitioning to a technology and consumer-oriented economy. That's going to take time to process as part of that. But in a slow growth environment, I think right now, relative to oil, it's yet to be seen where that bid's going to come in.
Yeah, there's an offset, isn't there? So tactically, if you are a value investor, if you're patient longer-term capital, do you start dipping your toes rather, in these waters, or are they just too treacherous right now?
No, we've been advocating, especially today, given the notice that the Fed gave, small things like the FANG trade, for example, Facebook, Apple, Netflix, Google. Those 4 securities were probably the single biggest reason why securities in the States sold off.
New economy, 21st century technology.
Exactly. Those securities will start to rebound in this. The other subtle theme that people haven't picked up on is Chinese technology stocks. There's a complete contra-trend in those securities in China right now relative to other markets, especially in comparison to the United States. So right now, this is actually an opportune time for investors to be bullish. The Fed stance is now accommodative. They're not going to be raising rates for the near term. And we've been advocating to clients that they should need to significantly revisit their assumptions going into the equity markets.
Let me just pursue that on the theme of the China internet stocks. And you like them, and patient capital should pursue them because they are exposed to this longer-term structural thematic in the Chinese economy of rebalancing towards retail, ergo the consumer, yes? Is that the basis of the trade?
Well, the first underlying assumption, and one of the things that we've said, is China now has shown an extraordinary degree of prudence relative to what they've done with their currency, their economy, and reserves, and we can talk to that. Here's the trade I would say to viewers today. If you wanted to recommend a set it and forget it trade, you look at what's happening right now in Chinese technology stocks that are engaged in finance, in this whole theme of fintech. One of the themes we've told folks, if you could close your eyes...
Do you think Ali's doing that?
For 3 to 5 years. Any one of those companies now, what they're doing with finance on the mobile phone, which is completely disruptive to the banking industry, you could literally line up the top 5 loan-to-deposit ratio banks globally, short those names against any one of the Chinese technology firms that's now in fintech, and that is the single biggest disruption we see right now as an underlying theme in China.